Good afternoon, everyone. Welcome. We're just gonna give it a couple of seconds for everyone to filter in and then we'll get started.
Hi, everyone. I'm seeing a lot of familiar names popping up on my screen. Hi, Jennifer King. I miss you. Hi, Troy. Anna Baca, blast from the past. Don't get mad when I use that city as some of my examples. I miss you too.
All right. Hello, everyone, and welcome to using your ERP system to help relieve staffing challenges. We're glad you have joined us this afternoon. Before we get started, a few housekeeping items. This webinar is eligible for 1 hour of CPE credit. We will launch 3 polling questions throughout the presentation. To receive credit, you must answer all 3 polls and also complete the short evaluation you will receive afterwards. The evaluation email will be coming from a program called Prolera. This webinar is being recorded, and you will receive the recording link and slides emailed to you later today. Be on the lookout for that in your inbox. This webinar will run 50 minutes with 10 minutes Q&A at the end. Kelly will try to answer as many questions as possible throughout the presentation and will do her best to address any unanswered questions at the end of her presentation. If you have a question for her, please put it in the Q&A box located in your Zoom toolbar. To find your Zoom toolbar, just hover your mouse over the bottom or top of your screen and it will pop up. Look for the Q&A icon. Now I'd like to introduce your presenter. Kelly Telford, CPA, is a partner in LSL's Government Services Department and has over 18 years of experience in public accounting. Her background includes accounting, financial forecasting, budget development, public utilities, investment management, grant management, human resources, and information technology. As a government services partner, Kelly oversees engagements for a variety of nonprofit and governmental clients, providing auditing and consulting, often acting as an extension of their finance department. Prior to returning to LSL in 2022, Kelly served as the Director of Finance Treasurer for the cities of Seal Beach and Costa Mesa. Take it away, Kelly.
Thank you. And hello, everyone. I know people are still trickling in, but I want to say thank you. I know a lot of you signed up for the original version of this webinar, and unfortunately, I was dealing with some really, really bad neck pain and shoulder pain, and there was no way I could sit through this. So thank you for coming back and joining us about a month later. I appreciate it, and hopefully this presentation is useful for you. If nothing else, just a little bit informative, ways for you to improve utilization of your ERP system to help address some of your staffing issues. So a little bit of what we'll go over today, utilizing your current software, whether it's to do reconciliations, whether it's taking advantage of some paperless solutions. And then also, you know, if your system doesn't really have good solutions, maybe it's a little bit outdated and you don't have a system that's capable of some of what we're talking about, we'll look at, you know, how to kind of get that process started, how to start evaluating the possibility of a new system and some things to consider. I'm gonna try to go as slow as I can. I have a tendency to be super fast. Those of you who know me know that. So if we end a little bit early, we'll take questions and maybe share some stories. So before I jump into it, this has kind of become part of a series, little unintentional, but it's been great. A lot of you have been with us along the way. This is the third part. The first part we started talking about doing more with less. That was during our GASB update this past April. It was titled Doing the Same Work with Fewer People. Focused a lot more on staffing shortages and being able to address your needs in different ways. If you missed that, don't worry. We're actually going to be presenting some of that at the CSMFO conference in February, which I know is going to be one of our closing slides. And then in July, we did a second piece of it that really discussed addressing your staffing issues with the people that you already have how to develop the people within your organization, create succession planning, create cross training to allow them to perform in various facets of your finance department. And then today, one of my greatest loves and probably one of my most frustrating times throughout my career, dealing with technology solutions. The little things that we can do every day that will actually have a tremendous impact, both monthly and annually, dealing with month-end close, year-end close, reconciliations, that kind of good stuff. So with that, let's go ahead and jump in. So, got to have these polling questions. Let's get one of them out of the way. Which of the following describes your organization? The first one, our ERP system is new and works beautifully. Our ERP system is new but isn't working that well. It's a little bit older but not terrible and works well. It's older and could be a refresh, or it's a dinosaur and should be extinct. Come on, I got a little funny with that one. Give you just a couple of minutes. I know we had a question in the chat if the materials are accessible. I believe they're already up there. Cami, are you able to help with that question?
Oh, I will put a PDF of the slides in the chat, and you can download it from inside the chat.
Awesome. Thank you. All right, I was right, Cami. I can't see on my end where we're at with the polling, so feel free to let me know when we're ready with the answers.
Awesome. I'm just gonna give it maybe 5 more seconds. It looks like everybody's answered the poll. If you do need CPE, make sure that you answer all 3 polls, just as a reminder throughout this presentation. All right, and I will end it. So it actually looks like we have a pretty even
wow,
feel across the board.
Interesting. So it looks like a good portion, about 60%, are kind of in that it's older and it works okay, but it's not terrible, or worse, we need a whole new system. So for those of you who are in the last 3, really the last 2/3 of the presentation will be really helpful for you. And then those of you who have a newer system, maybe it's working well, maybe it could use a little bit of improvement. These next few slides will be really good for you because it will show you how to use your current system to its fullest. So with that, let's move on to, oh, I want to keep going backwards. Sorry about that. Okay, so let's jump in with some things that you can do daily or semi-daily that will pay off in spades. A lot of organizations don't realize this, but most of your newer ERP systems have built-in reconciliation reports for your utility billing subsidiary ledger and your accounts receivable subsidiary ledger. Particularly, I know for sure your Tyler systems do. If you set up a daily report to run, just schedule it. You're not going to need it daily. But if you schedule that report to run daily and it drops into your reports, and all of a sudden, when it comes to the end of the month, you're out of balance, but you were in balance between your subsidiary ledger and your general ledger last month, you can easily just click into each of your daily reports to isolate the day that it became out of balance. This actually was super helpful. We implemented a new system at the last city I was in, and our utility billing was fantastic. We actually used Tyler Encode, which is just a step below Munis. And I loved this feature because it was super easy for me to click in and see that it's in balance. And all of a sudden, at year end, we were out of balance, and we were able to identify the single journal entry that had triggered this and fix it. Exact same situation with your accounts receivable subsidiary ledger. One thing which you'll see on my next slide, but one thing to point out is to really effectively use the system for this, it's best to have independent AR accounts on your GL. So if you use, say, the 1000 series for your assets, if 1100 is accounts receivable, use 1200 for accounts receivable utility billing. That way your system is set up to keep your subsidiary ledgers fully separate. I know in the Tyler systems, they do have reconciliation reports for each subsidiary ledger. And if it's set up properly, both ledgers will reconcile beautifully. One of the other things that I'm a huge proponent of, and from a consulting perspective, this is one of the things that we put in place for almost all of our consulting clients that we do month end and year end close for, and their bank recs, is daily cash. Reviewing your cash postings to the bank, making sure if your GL is showing checks, credit cards, and cash deposits for yesterday, go into your bank today, make sure that's what cleared. I'll show an example of that in just a second as well. But spending, 30 minutes every morning, not only does it help give you comfort over cash, but it helps you make sure that all of the transactions are being picked up on a daily basis instead of your month-end bank rec becoming an overwhelming task and taking a ton of time. In organizations that we've put this in place, we've been able to reduce the bank rec process to just a few hours. Another one that I often see is cash receipts being applied. Either they're posting into a miscellaneous account, or they're posting, like we had an unapplied cash account that we used in my last organization. If you create, I'll call it a parking lot or bike rack, if you create a place for those to post to, and you cash those checks and process those payments, you'll minimize the differences between your GL and your bank, and it will certainly prevent you from holding on to uncashed checks, which we all know is not a good thing. Once a month, go through and pull out any of those items that are still posted there, find the right home for them, and journal them out. When we had this set up in my last organization, we might have a handful of items posted there per month. A lot of it was information that we were waiting on from other departments. Sometimes it was grant cash receipts, and we just didn't know which grant to apply those to. But you park them, and then you fix them later on once you know where to go. But you can get those in your bank and get those in your GL, so you minimize those timing differences. So let me show you an example. This is out of Tyler system. As I mentioned, most of your newer ERPs will have this. And we do this every month. We run this report for the clients that we do a month-end close for. It's a part of our standard checklist. Even if we don't have a report, we perform this checks and balance, and we just do it a little bit more manually. But we make sure it's clean on a month-to-month basis. That way, if we get to year-end close and it doesn't reconcile, then we only have to look at the month of June. We don't have to look at the whole year. So this one is for the utility billing subsidiary ledger. You can see on this side, you have your general ledger account numbers and the balance that's currently in those accounts. And over here, you have the charge codes that are pulling directly from your subsidiary ledger, the utility billing system, and what the receivables are for each of those codes. And you can see here, there's a variance. Now, this particular example, the reason for the variance is because this client was using the same accounts receivable account for the regular accounts receivable and the utility billing. So we have to take two reports, the UB reconciliation and the AR reconciliation, and add them together to make sure that it reconciles. I mentioned about having that dedicated GL account. It's a lot easier to break out your account numbers to have them by purpose. So 1,200 being accounts receivable, you could use, or 1,100 for accounts receivable, 1,200 for utility billing AR. I've even seen one of my clients up in Northern California. I learned a lot from their subsidiary or their general ledger. I love the way they built their chart of accounts. They've even broken it up further to where they have, say it's 1,300 for their AR accruals, so that they know that one needs, that account number should be reversed July 1st of the following year. They've probably got 8 or 9 different accounts receivable numbers that they use for different purposes, which makes it so easy to reconcile. But this, in most of your newer systems, it's just a report that you run. It reconciles itself most of the time, and it takes just a couple of minutes. But double checking it on that monthly basis saves a ton of time at year end. Here's an example of a daily cash log. This particular one displays out, it's for a city. So it shows the types of revenue that are coming in, basically our daily cash activity, but it also shows here cash and check that are coming in via the counter compared to EFTs that are direct depositing into our bank account. Spending just a few minutes each morning, double checking that all of these amounts that were received from the previous day are posting into the checking account correctly will save a lot of time, even if it's something that's a small difference, $30. We all know those tiny differences are hard to find. You can gain some staff efficiencies. Have your cashiers at the end of the day, as they're closing their registers, have them enter the amounts into the log, and then have the person that does your daily cash, which is usually a supervisor or somebody other than your cashiers, have them be your checks and balances, double checking all of it, and consider preparing a daily cash log, or sorry, a daily cash reconciliation that shows your proof of cash. So as a finance director, I really liked this because I didn't keep all of my cash in my checking account. I had to move money between LAIF or other accounts to make sure that I could cover payroll and I could cover AP. I also liked building that into the second part of this reconciliation, where it shows your future receipts and your future payments for the week. So it's not on this example, but we would also have, if it was a payroll week, we would estimate out how much payroll was expected to be and include that as a future disbursement for the week. Because a lot of this is timing, right? It's making sure you have enough cash in the account to cover what's coming in and going out for the week. But this will help you, if you give the state schedule for gas tax, sales tax, the county also has schedules for disbursements of property taxes. If you give this to the supervisor who prepares your daily cash, they can build these in, and you'll usually get notification of what is expected. You can go online and either double check it, or you'll get an email depending on your county of how much is coming in. Really big help from a cash management perspective, but even bigger help from a bank rec perspective. Coupled with doing the bank rec in our software and going through and clearing checks daily, posting these EFTs as we saw them coming in through the bank account daily, our bank rec took just a few hours to wrap up. Once in a while, we'd have anomalies. We'd have to look into it. We'd have to, if we had a credit card that was disputed and reversed and we didn't get notification of it, we'd have to look into that. But for the most part, the meat and potatoes part of our bank rec was very straightforward because of our team taking care of this daily. All right. So your organizations are probably a lot like the ones that I've worked in before. We used Excel a lot, particularly for reconciliations. On the revenue side, every month my team would maintain an Excel schedule for TOT. They'd maintain Excels for property taxes, sometimes gas tax. It was just very heavily intensive on regurgitating what's already in the ERP system. So it took us implementing a new system for us to really learn some of the features to understand how to use the system. So one of the things to consider is building out your cashiering subsidiary ledger to do that work for you. Most of your cashiering systems use pay codes. They might call it something different, but an example of one of our pay codes was TOT. So our cashier would just enter in TOT and it would auto-populate the revenue account number that cash receipt would be posted to once it was actually processed. So if you have your customers set up in your cashiering system, which we all do, and you have your pay code set up, why not run a report out of your cashiering system instead of your general ledger that details out that TOT pay code by payer? One of the cities that I was in, we only had probably 20 payers. We had a few short-term rental agreements that we had allowed, and then just a few hotels. So it was much more manageable. But on a bigger scale, if you know you're getting payments monthly, it's a lot easier to run this report out of your cashiering system and then double check. Do I have 6 payments? Do I have 7 payments? At June 30th, do I have 12 payments? Helps you track who owes you money still, helps you stay on top of assessing penalties and interest. And it's certainly a lot easier to be able to reconcile to your revenue account, especially for this one that goes to a single revenue account. This ended up saving significant time because we had this huge spreadsheet that we would enter in every payment for every payer, and it never reconciled, even with only 20 payers. We always had to research a small difference, something that we just forgot to enter. But if you use the system and run a custom report, it's much easier to tie it out. I also liked using this. I didn't do this every month, but I would do it periodically, maybe semi-annually. For instance, when I was doing mid-year, and then again, when we were doing our year-end close, I'd run the cashiering report for anomalies, because on our general ledger, it doesn't always give you enough detail. And sometimes you have fluctuation in dollar amounts. Sometimes you get large cash receipts, sometimes they're small. It's a lot harder to find missed postings. So we would run it by vendor, by payer, and be able to see, oh, wait a minute, that's not an occupancy tax payer. That's in the wrong line. It was posted to the wrong pay code or cash receipt code, and we needed to move it out. These reports are super helpful. Same idea for gas tax. For property taxes, though, this is probably the one that I never thought of when I was in a city until I was consulting for a city. And it was that same city in Northern California that has a much more detailed chart of accounts. That particular county is not easy to match up the remittance advice to the GL. But why not build out in the cashiering system, those cash receipting codes to match what's on the remittance advice? So I'll use something really easy like unsecured property taxes. We know that we usually have a regular unsecured and then an unsecured prior. They go to the same revenue account, right? However, why not include those as separate codes in your cashiering system? And then you can run a custom report at the end of the year that shows this is how much we got in unsecured, this is how much we got in unsecured prior, and it reconciles and ties 100% to the remittance advice, to that year-end summary that most of us get from the county. Just because they go to the same revenue account doesn't mean that you can't enter it in separately into your cashiering system. I've seen counties where there's 20, 25 different line items on those remittance advices. And it's because of some of the additional taxes, if there's assessment districts, things like that. Why not just create each one of those 20 lines? Makes your cashier's life easier. It makes, I know for us, we used to have to do an Excel spreadsheet, key that remittance advice into the Excel, and that ultimately told our cashier how to enter it into the system. Well, let's just skip that step. Let's make it easier and use the software to do that instead. I mentioned gas tax. It's the exact same as that TOT example. Most of us have the different, 2105, 2106, 2107, 2107.5, I think it is. Why not run that out of your cash receipting system to make sure you have all 12 months? You could do it just as easily in your general ledger. But if you start to learn to use your cashiering system as a subsidiary ledger, it really becomes helpful. I actually I don't know if the city of Fullerton is on this call. I don't see any of you on here, but I'll use Fullerton as an example. We helped with the implementation of GASB 87. They were implementing a software solution, and they were the first city to say, hey, why don't we run our AR subsidiary ledger detail to give you the 12 months of cash receipts for our lessor leases? Because we bill those out. Yes, we have a spreadsheet where we track all of that, but let's just run the subsidiary ledger. And we can run the ledger over a larger period of time to be able to show if there's a 3% increase or a 5% increase. It can also show if there's been amendments that we didn't know about. That report ended up being critical in us getting their lease implementations correct. And they're a part of the reason that I started thinking about this cashiering system a little bit differently as a true subsidiary ledger, not just a means of getting the cash receipts posted to the GL. Just something to consider. All right, journal entries. This is another area that I probably should have done a polling question on, because when I talk to clients, I get a wide range of responses. A lot of folks don't use the import feature of your software for journal entries. They also don't use the template, the journal entry template features. In some softwares, it's a lot easier for staff to enter a journal entry into your Excel template than it is to enter the journal entry into the system, particularly to see if account numbers are correct, if journal entries are balancing and the end results are what you're expecting them to be. I just found that some softwares aren't as user-friendly on the journal entry side. I particularly don't like the last software that I used. You could enter numerous journal entries into a single batch, and things also tended to get lost. So why not look at using these features as a part of your solution? Set up all of your monthly journal entries for internal service fund allocations, for your bank reconciliation items. We always post fees. We always seem to post the same 3 to 5 journal entries during every monthly bank rec. Why not just set up a template for that and make it a lot easier and save some time keying that into the system? Interest allocation is a really big one. GASB 31 at the end of the year, our fair value adjustment. Man, those are really big journal entries. Create the template for those in your software, and then all your team has to do is key in the dollar amounts. It's already set up there with the right account number, so it makes human error a lot less likely. And it also saves them time in entering in that entry. I really think this import process is good if it's not something that's standard. We use an auditing software here at LSL. It's called Caseware. And our audit team members, we had one client where we had a tremendously large journal entry. It hit every single fund, 3 accounts in every fund, and it was not a small city. And we always try to have our clients post those entries before we get the trial balance. Well, I haven't been at LSL for 8 years. I'm just coming back and just getting back into doing auditing. And lo and behold, our software has an import feature. Some of our staff didn't even know this. It was so much easier for them to import these big journal entries from our clients than it was for them to sit there and key it in. And entering a journal entry is almost identical in our auditing software as it is in an ERP system. Explore those features of your system. See what's possible. Most people don't even realize that there's a reversing feature too. If you have a conversation with your team and you educate them on the journal entries that should stay and the journal entries that often get reversed, you might post an accounts receivable accrual at June 30th that ultimately gets reversed on July 1st. Why key it in twice? If your system has a reversing feature and you can click the box and it knows to automatically reverse that journal entry on July 1st, you just saved your team a bunch of time on all those accrual entries. Now, I will caveat that this means you need to educate your staff as they're preparing journal entries, and whoever is responsible for reviewing those journal entries needs to make reviewing that a part of that review function to make sure that the box is marked appropriately. We actually find this a lot when we're doing our audits. Journal entries from the prior year that were accrued but were never reversed. And the cash receipts, I mean, our cashiers often just post the cash receipts as they're coming in. They don't necessarily know that there was a journal entry at June 30th of last year. Now, if it was an actual invoice through the AR system, it should populate as they enter the vendor information in. But if it was just a journal entry, the cashiers aren't going to know. We often find duplication in AR where the cash receipt has already come in, but the prior year accrual was never reversed. We also find this sometimes with the elimination of negative cash. Sometimes our clients will post that due to, due from, and not reverse it July 1st. Well, how many of us are relying on our cash balances in the funds? You know, if you're eliminating a negative cash in the CDBG fund and you've done a journal entry physically moving the cash at June 30th, and they borrowed $300,000 from your general fund, well, come July 1st, your general fund is understated and your CDBG fund is overstated from a cash perspective. I know a lot of us don't necessarily post that journal entry. A lot of times the auditors will post it as a reclass entry. I personally, if I wear my audit hat, I want you to post the journal entry because I want your GL to tie to my financials. But if I'm wearing my finance director hat, I'm not posting that entry. That's just a financial statement only entry. So make sure you're getting those reversed. And if you are posting it, click that reversing box and just make it a standard practice. Okay, so we've talked about cashiering and how to better utilize that module. We've talked a little bit about journal entries. Let's talk about one of my true loves, the project management module. I'm actually not joking when I say this. If it is well maintained and it is used properly, this is a very powerful tool from both a budgetary perspective and an accounting perspective. Some of the ways to get the most out of this module is to educate your departments on how to use it and to hold them accountable. At one of the cities that I was in, the Public Works Department used a different numbering system than we did in finance. So in our software, we'll say it was numbered 1, 2, 3, 4. Well, Public Works labeled it A, B, C, D. There was no direct correlation. So they kept their own tracking worksheet separate. Believe it or not, most Public Works departments do. Unless you educate them and show them how to use the project management module and you hold them accountable relying on that module, they're going to find their own way to track stuff. So I know you all probably already know this, but because they track separately, there will inevitably be differences between their tracking worksheets and the GL. Part of the education process that I've used with the project management module is having regular meetings with the departments. Send them, either schedule it in the system to email it directly to them, or have it on a schedule for yourselves to print a monthly or quarterly life-to-date project report for open projects to show them this is the budget that we're showing. This is the actual expenditures that we're showing as of, we'll say as of December 31st. And then talk to them about if you have any differences, we need to know about this by a certain date so that we can post any adjustments necessary to prepare for the monthly or quarterly funding transfer. So there's probably 50% of you that pre-fund CIP. So maybe in the budget, you budget a $4 million number that the general fund is going to contribute to the CIP fund. And at July 1st, you transfer that amount over. Or maybe you do 1/4 and you do $1 million each quarter. The other 50% of you are probably saying, oh no, we transfer based on actual expenditures. Based on my experience, it's actually a split. There are organizations that are doing one method or the other. It's not always based on actual expenses. If you can keep public works and community development on top of this project management module and teach them how to use it, then your team can stay on top of those monthly or quarterly transfers. And you won't have to do catch-ups where all of a sudden expenses show up because, oh, we didn't realize it was posted in this project instead of this project, or we didn't realize that it was this funding source versus this funding source. For those of you who worked with me in the past, you know my take on the ERP system. Your ERP system is king. Whatever it says is right. And absent information in that ERP system, that information is reliable or unreliable. So you have to teach your public works department and community development to rely on those reports out of the system and fix what they don't agree with. So for me, there's a couple of, I've had one organization that pre-funded CIP and one organization that transferred based on actual expenses. For me, there was nothing worse than printing a cash balance report and not realizing that we hadn't done our transfer for CIP yet. So creating a schedule, create a cadence in your department, have someone assigned to manage projects. For me, that was always my accountant. He was always the one that I could rely on to double check coding to make sure that what the public works department was putting on their invoices matched what the project was actually for. He would double check, even though we would have our system double check the budget piece of it, we always had an additional check for CIP. And then he was a part of helping with the budget management piece of it and making sure that we were monitoring budgets in accordance with what council had approved. Speaking of the budgets, super important that if you're using your project management module, you're really using it. Make sure that you're entering in your budgets that are adopted as a part of your CIP program. Also make sure that you're posting in any amendments to those budgets. These systems aren't intended to solely reconcile expenses. They're also intended to help you on the revenue side. So especially if you don't have a grants management module, using the project management module for grants, you can run a life-to-date report that includes both revenues and expenses. And you can see the totality of that project. Say it's being funded with gas tax, a state grant, and general fund dollars. In your project management module, you can see the status of all three of those funding sources, how much of those funding sources you've used, and how much Public Works has left to be able to spend. For that state grant, it will also help you determine how much you need to request for reimbursement. Because if you're posting your cash receipts on the revenue side to the project, you're going to be able to match revenues and expenses, and you're going to be able to see where you are from a pacing perspective and whether or not there's a big receivable out there. We see this on the audit side quite a bit. I will tell you, every organization I have been in as a finance director and every organization that I have helped out on a consulting basis, this is one area we can all improve on, and that's grant management. Part of it isn't our fault. Part of it is because the departments have a tremendous amount of responsibility and control, but they lack that finance hat that we have. Using this module to bridge that gap for them and to show them, you now have a tracking mechanism to run a report and show we've spent $3 million, but we've only received $2 million. Hey, we're owed a bunch of money. Where is it? I have a client in Central California. They didn't even realize that they had not requested a drawdown on their TDA money in an entire year. And it wasn't just that money. It was all of their transportation related grants. They were owed millions of dollars. They lost out on the investment income because that money wasn't brought back into the general fund or back into whichever, presumably it was the general fund that funded it because of deficit cash. So they lost out on that opportunity to invest it. But they also lost out every report that they've been issuing to council. Every time the finance director has had a conversation with the city manager about the finances of the city, that's been missing. So this module will really help you keep an eye on your grants, or, I mean, project management modules and grant management modules operate the same. So utilize these modules. This really is a passion of mine. I love, Lewis is probably on here laughing because I know he's here. Lewis is one of my, the supervisors that works for me at LSL, and he knows how much I love project management. If you have questions on this or you need help, call me, because I love getting this system working correctly and showing you how you can use it to its fullest. Okay, I talked your ear off enough about project management. Really quickly, these are two areas that are still pain points for finance. They're a little bit harder to address, but different ERP systems do have different solutions for it. HR benefits, like health insurance. We know from a payroll perspective that the withholdings from the employee for benefits doesn't always match up with the payments that we make to the insurance companies. A lot of ERP systems do have a reconciliation feature in your HR module, and to be able to see this, to be able to track what's coming in and what's going out. This is something that I know for me, we've always put back on HR to try to reconcile, but just like with project management, HR is not accountants. They have a harder time figuring those differences out. Being able to work within your software, even reaching out to the software themselves, like say it's Tyler, reaching out to the help desk and saying, here's the problem that we're trying to solve. We're trying to figure out how to get the system to do this. That will create a lot of improvement on the HR side and remove a lot of headache from the finance side. I think I've said this in every single presentation I've given where I've talked about finance. Deposits payable is an absolute pain point for me. I hate deposits payable. I have yet to find an organization that really has a good system in place to be able to track and reconcile these deposits. A big part of it is because some of our organizations have like a flat rate for most of our public works and community development fees, where others, the last city I was at actually was 100% deposit based. So we would take in a $300 deposit. We'd incur costs in inspections and costs to be able to get that permit issued. And then ultimately we wouldn't do a really good job in matching the costs with that actual permit. And we'd end up having to give the money back, or it would just sit there in perpetuity and we'd never refund the money, which also isn't good. If you use the deposit method, you may want to talk to your whoever you use for your fee studies and talk about the possibility of changing to a direct charge method. We use ClearSource. I know a lot of the folks in Southern California use ClearSource. We use them for our fee study, actually at both of the cities I worked at. And we asked their opinion on recoverability and concerns that organizations had had about a deposit-based versus a fee-based system. And even they recommended that the fee-based made more sense for 95% of the community development and public works fees. The other 5% is going to be your larger development fees, where maybe it's a DDA that you have, and there's a lot more that goes into it. There's legal costs, there's multiple inspections. Maybe it's like in one of the cities I was in, we had a lot of sober living facilities. So you had CUPs and there was just so much more that went into those that a deposit base makes sense. Either way, a GL system is not meant to track all of that. You really need to use more of a land management system to be able to track that. And I know a lot of organizations are moving forward with newer systems, which is awesome, newer land management systems. But those organizations that don't have that in place right now, and maybe don't in the near future, this pain point really could be reduced by switching your direct charge versus deposit method. Something to take a look at. Most of our clients just run a GL detail for deposits and think this is our audit clients. They'll give us a GL detail as a reconciliation, which gives me a little comfort because, like I said, this has always been a pain point. But consider looking at your deposits payable and see if there's something that you could do to improve that. All right, question number 2, and I'm going to speed through the rest because what I thought wasn't going to take all that much time, it's taken a lot. Does your organization use a paperless solution? Yay or nay? Yes, we do 100%, some, or nope, not at all. Hopefully y'all are paying attention. You're answering it.
All right, we're just going to keep it for a couple more seconds. If you need CPE, this is your time to click.
The last 2 sections will go pretty fast.
All right, I'm going to end the poll. Here are the results.
Okay, good. I'm glad to see that some are, and that's actually what I'm seeing. So let me at least give you high level why you need to take advantage of this. And for those of you that say you do for some, try to make that push to go 100%. I do see a couple of folks on the call today that were with me at my first organization at the LACDA. We were 100% paperless, and it was not fair to treat me with being paperless at my very first government agency job, because that was my expectation going forward. And I learned very quickly that's not the case. But everything was paperless. I think we had maybe 5 boxes of hard copy stuff that was in our storage room. And it was just because it was on legal hold. I mean, we probably could have shredded that too. Having a paperless solution in place and fully utilizing it saves time, not just for your team, but for others as well. It allows you to pull information and have it at your fingertips anytime you need it. It allows you to reduce costs because you don't have to pay for storage fees. You don't have to have a free the files day, which we had at my last city. And as those of you who know me, I love to purge. I am really good at coming into an organization and getting rid of papers that people have been hoarding for years. But it also allows you to implement workflow, approval workflow. So imagine being a department head and being in meetings all day long, and you can spend 5 minutes on your phone, log in, and you can go through and you can approve AP items while you're waiting for your next meeting to start. You don't have to be sitting at your desk going through your inbox to sign the individual invoices. Being paperless allows you to also implement those workflows, not just for AP, for anything, for purchase orders, for, I mean, you could really do it for anything. You could even do it for some of your receivables, your journal entries. We had a dashboard in our last system that told me all of these things that we had to approve. And I had 5 AP items, 2 journal entries, 6 purchase orders that I had to approve. Everything was there. It was amazing. Really take a look at this. This is another passion of mine, along with the project management module. Go paperless. Also makes responding to PRAs easier, helps you reduce time. Other departments will learn to use it and will pull their own check support without bothering your team and having to pull actual check copies. No more photocopies for grant reimbursement requests. And then of course, it's less headache from us. When we come out to do your audit, everything's there. when I come out to do your audit. We never go out to do the audit anymore. Let's be honest. We're all remote now. So we log into your ERP system, and when we run a GL detail, we just click on the item we want to see the support for, and we move on. We don't have to send you a request list and have you pull 40 checks for us, scan them all in so that we can test them. Saves so much time. And then finally, oh, there's one more thing after this. Get capital assets out of Excel. I would venture to guess that about 80% of you are already 100% implemented in your system for capital assets, meaning you do your additions in your subsidiary ledger, you run depreciation in your subsidiary ledger. I would say probably 50% of the software is direct post to the GL. The other 50% print a journal entry from the subsidiary ledger that you have to secondarily post to your GL. Drives me crazy, seems very inefficient, but that's how the softwares are. If you're the 20%, get this module implemented. Human error is real when it comes to capital assets. I can't tell you how many times we've audited it and there's a cell that's deleted and depreciation on an item stopped running. And it's been like that for years because we don't test 100% every year. We actually can reduce our audit risk on capital assets. I'm telling you some secrets here. If you rely on your software, because it will remove that human error, which means there's less chance of a finding. I see findings for capital assets pretty rarely these days, but I just gave one for one of my clients. Wasn't specifically because of not using a capital asset module, but it probably would have been found sooner had they used their capital asset module. All right, here's my final. I'm going to spend 2 minutes here and then we'll have just a shorter period for questions. If you're a part of that 40% that really needs a new software, how do we get there? First, I'm going to skip ahead one here. First, look at doing a needs assessment. A needs assessment, I don't think we have any of my clients that have done this year, but a needs assessment is done by a third party that sits down and interviews all of your departments to understand how you operate, what are your processes, and what do you need a software to do for you. They then help you identify your pain points and put together an RFP, and the proposers will specifically address how their software addresses those issues. Also, make sure you have an implementation consultant on your side. I know for Tyler, the Tyler products, they use an implementation consultant on the Tyler side, but it's up to the city to do the implementation on your side. And most of us will implement a new software maybe once or twice in our career. It's not that frequent. So you don't know what you don't know. And IC is pretty familiar with all of the softwares, and they're pretty familiar with how the softwares are intended to function. If you're implementing a new system, you have to change your processes because ERPs today process information differently than they did 20 years ago. It's also a great opportunity to update your chart of accounts. And then of course, you'll want to update your vendor lists, customer lists, employee lists, clean out all the crap. We had at my last city, we would have like 7 of the same vendors with different addresses, or maybe someone couldn't find that vendor and they created another one. You get to clean up all of that stuff. So there's some really good stuff that you can do before you even get started. Inactivate vendors, inactivate employees, should be doing this anyway, and get that stuff cleaned up and start thinking about how your chart of accounts can be better. And these last 2 slides, I'll be fast. Keep your team in mind. Your team will struggle through this. Even mentally, getting them on board for a new system or some of these changes in general can be hard. But if they understand how they're going to benefit from it, they will buy into it. Focus on the end goal and involve them. Have them be a part of the solution. Have them be a part of that discovery phase too. What are their pain points? Where do they see getting caught up? And then that last big bullet point, have that temporary help queued up. If you don't have access to temporary folks, let me know. I've got, not with LSL, but I've got great resources with other organizations, other consultants that do temporary or interim placement. They are tremendously helpful in doing the day-to-day so that your team can focus on your software. Because at the end of the day, your team needs to be able to function in that software. And my last tidbit, communicate with everyone, all of the departments. You should be communicating that the software is not doing what it should be. Maybe there's vulnerabilities. For me at my last organization, there were network vulnerabilities. We had already had ransomware once, and Windows was about to stop supporting the version that we had to operate on. We had to get off of it quickly. We had interviews with the other departments. We talked to them regularly. We provided updates at the department head meetings, and we informed council. Bring council along, or your board of directors, bring them along for the ride. It's tremendously helpful. And that way, if things get delayed or you need more money or you stumble upon problems, you've already planted those seeds and you can cue them up in the conversation as you're trying to address those issues going forward. So I know I spoke way longer than I was supposed to. Oh, my last point, slow down. Last polling question real quick. Based on question 1 and the ideas that you've heard throughout this presentation, do you think there is more you can do with your ERP system? Yes, we do some of these, but there's room for improvement. Yes, we just need to start over. And no, not really. We are utilizing our system to its fullest. I know I sped through that last part. It's really funny because I thought my presentation was going to be 30 minutes, but I really love project management. Hey, Cami, I'm seeing chat items, but I'm also not seeing questions. Are we good?
We do have one question, or one good question that I think we can fit in this last bit is, how do you get your team excited about implementing a new ERP system?
That's a really good question. So your newer employees, the ones that haven't been at your organization, probably 5+ years, they're going to be more excited anyway, especially if they've worked at other organizations where newer systems were already in place. I've had folks that got excited by just the possibility of getting over their hurdles. Maybe it's payroll and payroll never calculates properly. Well, let's fix that. Our old system isn't capable of calculating it properly because they're not even loading the new tax tables. Get us in a new system and let the system do the calculations for you. When I was at LACDA, we had this, our retros were not calculating properly. So we were having to do our retro payrolls manually. And we ended up working with PeopleSoft and being able to get it updated. And it was a little bit of a task, but my goodness, payroll was just excited to not have to do manual calculations anymore. And I was excited to not have the reliance on the potential of human error as well. I think involving them, asking them questions is your #1 way to get them over that. And showing them that it will be better in the future. What else? We got a couple more minutes for questions. Are there any more, Cami?
Well, I am sharing the results of the last poll. So it looks like it's basically a round of yeses. We do need some of these, but there is room for improvement, or everyone just needs to start over.
I give credit to the people who say we just need to start over, because acknowledging you have a problem is the first step to fixing that problem. So I do want to point out, if you're coming to the CSMFO conference, that first one that we did in this 3-part series, finding new ways to do the same work with fewer people, we're going to be sort of rebroadcasting that, but we're bringing Patricia Song. She's a finance director for the city of Garden Grove. She's going to be presenting with me and talking a little bit about how we've helped her provide that relief to her team as she had staffing shortages, as she had instances where maybe there was a gap. We came in and did some bank recs for her, and we're implementing some new modules in her software for her. So if you're going to be around for the conference, come find us. I think it's going to be on, oh, it's here, Thursday, February 2nd at 3:15. We're also going to be at the conference and have our booth. So come stop by, say hello, give us a hug. We'd love to see you. If you guys would like any additional information, if you want to have a conversation about project management, please reach out, let me know. ERPs has kind of become a love-hate relationship, and I really do like helping organizations improve their reliance on their ERP system. Here's my contact info. I'm always here if y'all need anything. And with that, I believe that is the end. 4 o'clock on the dot. Actually, it's 2 o'clock. Sorry, I'm in Texas.
Thank you,
How'd I do,
Kelly.
Cammie? Timing wise, good?
Sounds great. Thank you so much. And just as a reminder, you guys will all receive a link to the recording as well as a PDF in the slides. So look at your inbox a little later.
All right, sounds good.